Hey, good morning, everybody. It's Thursday, January 22nd, 2026. I want you to just let that sink in. January 22nd. That means most of January is already gone. That means we're already 1/12 of the year gone. Where's it go? Oh boy. Anyway, welcome. My name is Hammer. I am the founder of Originator Success, Grab and Go Social, and Rate Sensei. I own a company called Hammer Solutions. These are three of our products that help mortgage originators get more business in 2026. Be sure to check those out. I should say something very YouTube blogish and be like, thanks to our sponsor, Originator Success, Grab and Go Social, and Rate Sensei. Anyway, remember, we can have fun together each and every weekday morning, 9:30 a.m. Eastern time. I go live, talk about what's going on in rates and the markets. Quite a bit to dissect today. We're going to have some fun. This will be a good one. If you would like to join me each day live and you want a reminder that I'm going live, best thing you can do is get our text alert. In fact, that just went out. So most of you probably got it. But if you'd like to sign up, it's a free text. We don't sell your information. We just use it to text you and let you know that I'm going live. hmmr.io/reminder. Or use this cool QR code over here. If you're on your phone right now, take a screenshot, go back to your photos, press and hold it, and it should work. Also, while you're signing up for things, don't forget, check out our written email lock advice each and every weekday morning, talk about your brain going on overdrive, right? ratelockadvice.com. I have not written it yet this morning, but I will soon. And our text alerts, they're $7 a month. It doesn't have to cost you a lot of money. If you don't need a lot of bells and whistles and marketing and calculators, and you just want to protect your pipeline in crazy times like these, know what's going on, then check us out at ratetextalerts.com. It's a very good thing to do because of all the volatility that we're seeing. $7. Can't beat them. You should join them. So check those out. Let's go ahead and say hi to all the live folks here this morning. We've got Nicole Semerad first to say hello this morning. Good morning, Nicole. Hope you are doing well. Brandy Brickler, my friend, Michael Scott Love, Mallory Fotiadas, Jared Vincent, good to see you. Paul George, Laura McCain, Holly Johnson, Sean Segaloff. Segaloff, I'm in the mood for some bacon. It's your fault. We got M. David 800. Is that Mark David? I can't. A little tiny picture. The problem is that's what I see. I see your YouTube handles. So let me know. I think it's Mark David. We got Tammy Metzger and we got Angela Walters, Mark Frederick David. There you go. See, and now you're on Facebook too. Ron Siegel says today is National Blonde Brownie Day. Just to clarify, not to be confused with National Blondes Bringing You a Brownie Day. I'm a man. That's a man thing to say. Hold on, I'm going to sneeze. All right, just one. Anyway, good morning, each and every one. I'm going with the regular brown brownie over the blonde brownie. I don't know about the rest of y'all. Lisa Crampf, good morning. Siegel's always in the mood for bacon. Tony Fitzgerald, great to see you. Sean's rubbing it in. He just had bacon at a networking event. Yeah, well, did you bring us any? Then don't talk about it. All right. Anyway, let's go ahead and dive into the good stuff here, my friends. We're going to start off with the technicals, bring it up on the screen, tell you what's going on this morning. All right, like I said, we are going to start out, take a look at the technicals here. We'll do a quick recap of what happened yesterday. Let me zoom in on this. And we will go over. All right, so taking a look here, what we've got going on. Yesterday, things were kind of just chugging along, as you see right here. And then we have poof. What is that? This is a very weird. It's not. Did they do an update? Where's my nice bright colors? I don't like that. I don't like that. All right. Well, I'll have to mess with it later. I'll have to see. So anyway, take a look here. We've got things are chugging along, and then this would make for the happy dance where things improved on the day. Taking a look for that. The reason that happened is because late in the day, there was some talk of resolution on the Greenland situation, and Trump came out and said that he had, hold on, I got to look at the text alerts to see what he said here. Hold on a minute. I'm going to get that for you here. Trump said he was moving towards a resolution with a framework of a future deal. And it would avoid the tariffs. That was a big thing, big part of it, with a promise of specifics to the agreement coming shortly. However, we have not seen any of the promised agreement, and I think that's why this morning you're seeing things getting worse this morning, and bonds losing a bit of ground and traders giving up a little bit, because there was all this talk right here. We were up like, hey, we've got a deal, and then, hey, where's the deal? Everyone's kind of looking at that and what we got going on. There's talk here. The deal between President Donald Trump, NATO's Secretary General Matt Rutte, I think it's how you pronounce it, paves the way for NATO to beef up security in the Arctic region to fend off threats from Russia and China. The framework entails stationing U.S. missiles, mining rights aimed at keeping Chinese interests out, and bolstering NATO presence, according to European officials. The issue of sovereignty was never on the table, with Danish Prime Minister emphasizing that ceding territory to the U.S. is non-negotiable. And that's the reality as we go through this. Is I can't tell you what Trump wants. I can only tell you what I think Trump wants. I don't think Trump cares if this is the 51st state. I don't think it's even. In fact, they only have 50,000 people. I think there's a requirement for more than that to vote to become a state. But I don't think that's even what he wants. I just think he wants control and the guarantee of control moving forward. And that is likely what I think this will bring. So anyway, looking at what we saw yesterday in bonds with this move here and where we were at, taking a look here, we were moving up on the day, which would have brought us better pricing. However, now we are down on the day over here. We're down 11 basis points to start the morning, basically putting us right around that same range, maybe a little bit better than when pricing came out yesterday. So rate sheets today should be pretty similar to what we saw yesterday. Not much here that we are getting a little bit of a movement, 6.21 compared to 6.20. Not much of an improvement yesterday over Tuesday, but a little bit of improvement, and maybe a little bit more improvement today, or about the same. So that's actually the closest thing we can call to a win at the moment, is the fact that we're not seeing rates that are shooting up or moving higher. 10-year treasury yield ticked down a little bit, 4.26, better than 4.30. You can see it here on the chart. We capped out on Tuesday, and it improved and went down on Wednesday, but it's up a little on Thursday. Remember, this is the opposite of what we see over here in mortgage bonds. Mortgage bonds, we want these to go up is a good thing. We smile when they go up, right? We want that to happen. Over here, we want yield to go down, because it's not pricing, it's yield, and the yield is the inverse of pricing. So that's what we're looking at here with that. Now, reprice risk on the day is moderate. There's a really good chance. Good morning, Zane. There's a really good chance that we could see continued selling and volatility. Everything's going to depend on the headlines and how things continue to play out through all of this stuff going on over here. Why does it do that? There we go. Okay, so that's a big part of what we have to be watching and seeing where things go, is where the headlines go. Now, first headline, let's go ahead and we'll jump into the headlines a little bit, and I'll throw the lock advice down at the bottom. I wouldn't be afraid to lock by any means. We're very, very cautiously floating. What you'll notice is a lot of times by the time I get to the end of day text alerts, we talk often of floating and of locking. But yesterday it said, moving towards a resolution on Greenland, Trump claims a framework of a future deal was reached, which would avoid tariffs, with a promise of specifics to the agreement coming shortly. Stocks rallying, bringing bonds with them, setting up some lenders to reprice better with the rest to see AM pricing, better AM pricing. If the gains hold or continue, improvements are tenuous. That was the thing you really got to focus on. Improvements are tenuous, but there for now. This is what we expected, volatility. What's nice is it's volatility within a range, though. We're not seeing rates go nuts. We're just seeing rates bounce around. It's on again, off again, on again, off again, with all this stuff going on with the Greenland situation. Rudd says Trump Greenland plan involved no sovereignty talks. That's a big part of what will change our outlook. If we see talk of taking over, that would freak everybody out. Let's see. Ron Siegel said, in the interview, Before POTUS left Davos, he said, "We will control Greenland and the rare earths forever. No cost to the U.S. We will deploy part of the Iron Dome on the island and obviously protect it. Same as Guyana, deterrence." So that I think is probably the clearest, insight into President Trump's idea of what he's looking for and why. Again, we're not going to discuss the merits of any of this because it's not relevant to the show. What we're talking about is how this is all affecting mortgage rates and pricing. So, to be very clear, once this settles down, rates will improve a little bit. We're not likely to go back to last week's rates. Those rates have sailed for the moment. We will see them again. They're not that far. What we would need to see is if Trump were to stir the pot again on the bond buying with Fannie and Freddie, that might help that a little bit. We have to see traders lean into that. Now, next week, we've got the Fed meeting. The Fed meeting is not likely to come off dovish and help bonds and help mortgage rates. So I'm not looking to next week's meeting to improve. We're cautiously floating at the moment, but without clear signs of improvement from here, and as like yesterday, we saw this initial reaction of improvement here, which is why we're floating. But then when we lose it, when we're right back, what goes up comes down. It puts us in a position where you're like, maybe we should lock them. Now, the next move could be a bad one if Trump starts pushing hard again. If he pushes hard on this Greenland issue, makes it sound like remember, his greatest blessing and his greatest curse. He bounces around. He says one thing and then reverts it 5 minutes later and then goes back to the first one. He doesn't care. He never takes the defensive to defend things he said. He'll just say new things. So if this were to escalate again, we'll see rates creep up another eighth. But if things start to improve, we're probably close to the best we'll see, but they could get a little better. But we'll see where things go. But, right now we're cautiously floating, but I definitely would not hesitate to lock if you like where they're at. The biggest problem we could do right now is chase after rates. Don't chase rates. Don't chase the rates. Ron Siegel said, if Trump will stir the pot again, as certain as the sun will come up, Trump will stir the pot. Exactly. But will he? It's what is Trump cooking? Is he cooking our soup? Is he doing something about home affordability? Because that will, could possibly help things again. But also remember, we got the Fed meeting coming up next week. In 2 weeks, we've got all of the labor market data. So this morning we had some different stuff here. You got jobless claims, by the way. Let's go ahead and hit that. Jobless claims came in steady, 200,000, a sign of low layoffs. We're not seeing a really soft labor market. There's no reason to expect that the Fed would have to cut rates. Expectations of a Fed rate cut in January, totally there's no cut. 95% expecting that rates will stay the same. When we get into March, that's still an 85% expectation that things will stay the same. When we get into April, you're looking at a 70% expectation that things will still be the same. Bonds, markets, traders, nobody is expecting the Fed to cut rates before Powell leaves office. And again, that whole DOJ thing, that turned south and suddenly just disappeared, took a backseat to Greenland. So I don't think you're going to see any real fallout from that or anything that's going to help rates and pricing. There's really nothing on the horizon here that gives us a clear indication that things are going to get better. We'll see. Everything's going to fall around this idea of a deal, and we could see bonds vacillate a little bit as that rolls its way around. But overall, as we expected at the beginning of the week, things would settle down this week. It was going to get done. The timing, again, whether you like him or hate him, I say a lot of things against Trump, and I don't have a personal vibe, but the bottom line, he's not a fool. And he started this thing on the weekend before he went to Davos, before the holiday, and during the holiday. And as he came out of it, he's not worried that the markets take a little bit of a hit. They'll bounce right back. He knows that. I know that, that. So now they have the Board of Peace was an interesting takeaway here and all that stuff. So anyway, all of this, rates, the good news, rates not in a position that we have to worry about them moving significantly higher. The bad news, they're also not likely to move significantly lower. We'll keep an eye on this 10-year treasury yield. If it breaks above 4.30, that would be a big red flag. But if it's, we would have to see it drop back down well below 4.20 before we can get too excited. Siegel said drivers today, low jobless claims, good GDP. Yeah, the GDP. Hey, George, you're bouncing my camera. George is on the desk. So the only catalyst to lower rates right now would be geopolitics or fiscal policy. Monetary policy will not change while Powell is in office. Nope. I agree. What do you think? What do you think, George? You agree? George agrees too. There's George. Don't you love it when those pet people put their pets on camera? The pet's like, what? Leave me alone. Go over there, George. There you go, buddy. All right. So anyway, I agree with you. Mike Tebow said layoffs will drop and less jobs created. Yeah. But that's still not, you're not seeing a whole round of firings, and it's kind of where we have to go. May 10th. Max, you're still on that. It has been like 9 years now. It's funny. Once again, ask for the moon, accept outer space. Yeah, I mean, that's kind of where he's at. Thank you, Vicky. Yeah, George and Sophia are cute. Those are the two. So my barn cats. All right, my friends, I'm going to wrap it up. We got a lot to do this morning. Hope you all are having a fantastic day. While I have you all here on the last part, don't forget, go check out Grab and Go Social. Go to grabandgosocial.com. Go check it out. It's $7 a month to get started. There's a video on the page showing you. But if you are looking to start building your online presence, if you want content, coaching, and community, we've got the 3 C's with Grab and Go Social. We give you daily pre-made content and editable content in our full content calendar. We also give you the weekly coaching calls, and of course the replays to those calls, going deeper, helping you to actually get more. And you don't have to be a guru. This stuff's all done by Austin on our team. Austin is awesome at this, but he has a gift for just breaking it down and making it easy for us old people or less tech people or too busy people, whatever you are, that don't want to deal with it, but yet want to get some of the results. He has a way of helping you do that. So definitely go check it out. grabandgosocial.com. It's $7 to get started. It's a discount of save $50 a month if you continue with the program. Go check it out. grabandgosocial.com. So hope you all are having a fantastic day. I'm going to wrap it up today. Thank you so much for joining me. Please join me tomorrow, 9:30 a.m. Eastern time. We'll see where this lovely road is going, and I'll see you then. Take care, everybody.